Bitcoin is currently trading around 77,030 on the 15-minute chart. After a sharp bearish breakdown, price has entered a consolidation range, and the most important event on this chart is the sharp rejection from the 79,000 to 79,600 region, followed by aggressive bearish displacement toward the 76,600 area. Since that breakdown, Bitcoin has stopped trending and entered a relatively tight consolidation range between approximately 76,600 and 77,400. The first major liquidity pool is above the range near 77,400 to 77,500, where repeated highs have created a clear concentration of buy-side liquidity. On the opposite side, repeated reactions near 76,600 create an important sell-side liquidity pool. A decisive break of this level could trigger further downside. Bitcoin is now positioned between two important liquidity pools. The market may first sweep one side before choosing the larger directional move. Above price, the first major supply zone is between 78,600 and 78,800. The stronger overhead supply sits between 79,200 and 79,600. Below price, immediate demand sits around 76,600, while the stronger structural demand zone is concentrated between 76,000 and 76,100. The sharp displacement also left an imbalance above the current range. If price rallies aggressively, this area can become a potential reaction or mitigation zone. Momentum remains weak while price trades around or below the moving average cluster. This keeps the short-term bias neutral to slightly bearish until resistance is reclaimed. Using the visible swing structure, the key Fibonacci retracement area overlaps with the market's decision zones. Confluency aligns with liquidity and previous price reactions. The bullish scenario activates only if Bitcoin breaks and closes above 77,400, followed by a successful retest. That would open the path towards 78,000. After a confirmed breakout, the immediate target is 78,000, followed by 70. A stronger continuation could eventually target the 79,600 supply zone. The bearish setup is cleaner if price sweeps the 77,400 liquidity and then closes back below it. That would indicate rejection of the range high. Under bearish confirmation, the first target becomes 76,800, followed by the range low around 76,600. A breakdown there could expose the 76,000 demand zone. Until a breakout occurs, Bitcoin remains range-bound. The middle of the range offers poor risk to reward, while the boundaries provide the more important decision points. Based strictly on the visible chart, the preferred setup is a short after a confirmed rejection near 77,400, rather than entering in the middle of the range. The setup becomes invalid if price establishes a strong 15-minute close above approximately 70 be defined before entry, with targets progressively lower toward the major support zones. A sustained reclaim above 77,500 invalidates the immediate short thesis and shifts attention toward the 78,000 and 78,800 resistance levels. The final bias is neutral to slightly bearish. The reason is simple. Price remains below major resistance and has not yet broken the range decisively. The key is confirmation. A clean break above 77,400 favors the bullish scenario, while a decisive break below 76,600 favors bearish continuation. For now, patience is the trade. Let liquidity be taken, wait for confirmation, and only then act. Trade the level, not the emotion.